Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this lesson I'm going to show you how we use stock options to generate multiple income streams on a compelling setup. They work the same bullish or bearish setups. All 9 of these are bullish setups. This is the starting point of our technical approach to trading anything that moves. Then we take one of these pictures, we have others also, and we see where is this setup in connection with the overall trend, support and resistance, multiple time frames, is it showing relative strength or weakness, what are the broader markets doing, and then you just enter and manage in between. That's all that trading is about. The setup I'm going to share with you today that we're going to trade options on is what's called a Master Trader sell setup. Let's start with the buy side. Very simple. Keep it simple, stupid. I'm talking to 8-year-old little Johnny. Little Johnny, we have an uptrend. Higher pivot highs, higher pivot lows. We're looking for a retracement and reversal on minor support, which is a prior high, and then we enter over that reversal candle. Pictures of buying can occur in different formats, but the message is all the same. Sell setup, which I'm going to show you, is a retracement and reversal at minor resistance in a downtrend. Buyers and sellers of options have different expectations, and the 2 trades I'm going to show you involve both of these. When you buy a call or put option, you are paying money for the right, not the obligation, to buy or sell the underlying at an agreed upon price on or before expiration. It's that simple. You can analogize it to a call option on buying your neighbor's house in the next 30 days at an agreed upon price. People do this for speculation purposes because this call option, if you're bullish, is going to go up in value as the underlying goes up in value, and you can buy a put likewise when you have a bearish bias. The seller of a call or put option is receiving money for the obligation to fulfill the option buyer's agreement, which is to buy or sell the underlying. We buy options or debit spreads, and we profit on our directional bias with leverage and limited risk. Those are the main reasons why we buy options. And a third benefit is if we get stopped out, we're going to lose less money than we did if we were trading the underlying alone. We short options or credit spreads, the seller, and we get paid because we're collecting that premium that we received, and we earn that premium received through time decay, and that time decay evaporates to the short options trading account as profit, unrealized gain. Also, as a stock moves in the intended direction with our technical-based approach, and also volatility contraction. Those are the 3 ways we make money selling options. This was a trade we gave our subscribers last week. This is a closed trade. Every single trade of ours gives the date, the stock symbol, the stocker option strategy, the technical setup. We're just not telling you what to do. We give education on every single trade. We give trade management. We send Telegram alerts. We manage it from open to close. This is a daily chart of Chewy. We have very simple, clean charts, red and green candlesticks, red and green color-coded volume, and I have the blue is the 20, 50, and 200. We call these moving averages. We use them to speed up the analysis, if you will. So everything, whether we trade stocks or options, starts with a compelling pattern. Chewy here, we're in a downtrend. We have lower pivot highs, lower pivot lows. These blue dots, we define a pivot low, for example, 3 higher low bars to the left and right, opposite for a pivot high. We're in a downtrend. Remember I told little Johnny, I'm looking in a downtrend for retracement and reversal at minor resistance. This is minor resistance right here, the gap fill area. I have a 1, 2, 3, 4 bar reversal here. That is creating resistance over time at the prior breakdown area. Once I had this wide range expansion engulfing bar, we say that that's the tell if you will, like a gambling analogy. I said, okay, I got you. You've done something with your moves that I can now have an advantage. That is my tell that this sell setup is ready to move lower. We bought what's called a bear put debit spread. We buy one in the money put option, which gives us the right to sell the stock at that strike price. And we're actually selling a further out of the money because that lowers the cost basis of putting on this position. And although the only downside is capping your maximum potential gain, the benefit of doing this is we flip the time decay on its head, and it increases the probability of profit, meaning it can actually even go against us a little bit and we still make money. The setup here, sell setup, which we just talked about, bearish reversal, just talked about, at minor resistance, just talked about, and the 20 MA. Perfect setup, executed this trade. We like selling, we like taking partial profits as it moves in our intended direction. So as you can see here, we sold 1/3 of our position. If you have multiple contracts, $3.75 a share, and we bought it at $2.90. You can do the math on that. And then we moved stop, went into trail mode. So for a 2-day trade, we made almost 20% return, $1,368 on a beautiful setup, high probability. Same setup, we have 3 different advisory letters, the advisory swing and options letter, and we also have a weekly options trader where we only sell options and credit spreads around the same compelling pattern that expires 10 days or less. So same pattern. We shorted the 38.40 bear call credit spread. What does that mean? See this $38 right here? This is the short strike call. So we're selling the $38 call. We take in premium. We have the obligation to sell the stock at $38, but we think it's going lower with our technical approach. We buy the $40 call just to reduce our maximum exposure and buying power requirements of the brokerage firm. Took in 23 cents a share. I have a rough rule of thumb where that I'm always looking for at least 10% of the spread width. So $2 wide, it meets that test with a compelling pattern. And our stop is over this ugly red bar. We will close out of the position. So we closed half at 10 cents. So we made over 50% of max profit in one day. And we tightened the stop. I said bid 2 cents for the back half. We actually trail stopped out. But again, another 2-day trade, made 5.5% return. And all we're doing is calling a short-term top. And as I explained on the other slide, we make money through time decay, volatility contraction, and as the stock moves in the intended direction, like it did here. If you'd like to learn more and get stock and option trades like I just showed you, go to mastertrader.com/advisory swing. Read about it. As always, email my partner Greg Capper or me with any questions. Good trading, and look forward to seeing you in the next trade review video.